All right, it is getting close to tax season. Of course, early in the year, always a great time to start to look into what your investment strategy is. And we are pleased to be joined by Ed Long. Ed Long is a graduate of the U of A MBA program, 1994. As you can see there, he did his undergrad at Auburn, but found his way out here to the desert, and he joins us now. You can see he's got his block A on, so he's still representing his MBA school. You got to be real happy with the success of the basketball program this year, Ed.
Yes, David. Yes, we're rooting them on. We have good hopes for them this season.
And obviously, you got still connections to U of A. Your daughter goes to school here. You still have a number of buddies, which is what brought you out here to Arizona this week.
That's correct. My daughter's a freshman, and I have some friends up in Scottsdale. So anytime I can get down to the desert, I'm here.
Outstanding. Well, let's kind of talk about your background. You actually went undergrad at Auburn. How did you find U of A MBA? Why was that a school that kind of was attractive to you?
Yeah, that's a great question. Well, I was an engineer at IBM and practiced engineering for 3.5 years, and wasn't really great at it. So I wanted to get an education, a more business formal education, and looked at programs throughout the country. And U of A was a top 50 program, so I chose Arizona. It was a smaller program, so a lot of programs to choose from, and so that's why I decided to come here and change my career.
So what did you learn through the U of A MBA program that has kind of assisted you on this path to being, one of the top financial advisors? You've been on CNBC a number of times as a nationally ranked top investor.
Yeah, the MBA program was great because it kind of rounded out some of my engineering skills. I was able to learn about, marketing and accounting and finance. And, I majored in finance while I was at the MBA school, and also a little entrepreneurship, which has really helped me in my career, especially now at my firm, which is a mid-sized firm in Connecticut. So really great skill set, and I met a lot of great people, and I'm still friends with many of them today.
So what are you doing specifically, like with your firm? What is your role? What do you do? Do you deal with clients, and how does that all work?
Sure. Well, I'm one of the principals of the firm, so we wear a lot of hats. We do the investing, we do the marketing, we run the firm, we service the clients. So it's kind of a unique business model. A lot of larger firms have many different layers, and so all the clients work with one of the owners of the firm. So we're really accountable for the investment results, and it's kind of like a family. So it's a unique business model that's done very well over the years.
Ed Long is joining us. He is a CNBC nationally ranked top investor, U of A MBA, 1994. Obviously, we've got a political election coming up here, a big presidential election at the end of the year. How does that affect the way that people invest in an election year?
Yeah, no, that's a great question, David. Usually people think that elections really matter to the results in terms of investing, and they really don't. The statistics show that there is no correlation, believe it or not. And like this year, the market is up almost 10%. We have an election that's about average, right? So the most important thing is the economy, and if it's going up, if we're growing. That's the most important. So, the politics, maybe in the short term, as we get closer to the election, there'll be uncertainty of who the winner will be. But there's no direct correlation, like I said, with election results with any particular party winning. It just doesn't matter over the long term.
Now, there's things in terms of, I guess, in a year like this that you push your clients to? Are there different types of stocks that they should be looking at?
Yeah, well, we're long-term investors, so, we don't really push them in a short-term direction necessarily unless there's a big inflection point in the market. So we're looking for opportunities. The market generally goes up 70% of the time. This year, of course, it's up so far. So we have to be pretty careful in terms of what we buy. But we're always looking for opportunities if there's a dislocation in the market, if there's something that investors don't understand that sends the stock down, we'll be nimble and pick up on that. But we're doing our homework all year and preparing ourselves for this volatile period that may be coming up. But again, the markets go up 70% of the time, so we want to make sure that we're looking for the long-term winners, high-quality stocks, proven management teams. Those are the things we're looking for our clients.
Ed Long joining us. He is a CNBC nationally ranked top investor out of the U of A MBA program, a graduate of 1994. Why, Ed, are stocks still the best investment even during high inflation and interest rate times?
Sure. Well, stocks are great during inflationary periods as long as there's not hyperinflation because as prices go up, the businesses are able to pass along those price increases to the consumer. And so the well run companies find a way to navigate through that challenging environment. And also, stocks provide dividends for the most part. There are some that don't, of course. But as profits grow, dividends grow. And so profits are in nominal terms. So as inflation rises, the sales prices rise and the profits rise as long as the costs are under control. So stocks are great inflation hedge for most clients. And you can see in a year like this and even last year, they've been great investments. Now, inflation has come down a little bit from its peak, and that's one of the reasons why the market's done so well is that inflation seems to have been, capped and has peaked out actually. So that's important for the direction of stocks.
And just to follow on that, what do most investors get wrong when interest rates and inflation is high?
Yeah, I guess they worry. They look at the past and they make a projection. They say, well, last year was bad, so this year is going to be bad, and that's not always the case. So our job as investors is to look forward and sort of predict what's going to happen 6, 9, 12 months from now. And so you have to do your homework, of course. But most investors' mistakes are succumbing to their emotions and kind of looking backwards. And we as professionals try hard not to do that.
So how do you? Because obviously, I'm sure you get clients that are young, in their 20s, right out of school, that maybe have a little bit of a knowledge of what investing is about, and then you might have somebody say that's in their 50s that has never invested before. How do you approach those different people that are coming in to find out and want to say, okay, I want to start doing something with my money?
Yeah, that's a great question. Investing, the successful investor really takes a longer term approach. So somebody who's younger, there's more time on their side, right? And so to try to, relay that to the younger folks is a little bit more challenging because they tend to want to go for the fast buck, the quick hit on sort of day trading or whatever. And that's not really a way to accumulate wealth. And so I give them examples of how that doesn't work. Folks in their 50s or near retirement, their time horizon is shorter, so they're less apt to do that kind of thing. But explaining to them why stocks are great for them, as like we just mentioned, inflation hedge, steady growth, those are things that investors of those age groups really need, especially as they march towards retirement. So it's really the same message, David, between somebody in their 20s or their 50s, that stocks are good for the long term. You have to have patience, but if you stick with it, it can be really rewarding.
All right, so what should investors consider to be paramount? High risk or low risk?
Well, it depends on what their risk tolerance is. So, of course, we hate to give a generic answer because everybody's different. But, inflation is good, like I said, in small bouts. But, when the economy is growing, that's the best environment for stocks. And that's what we have now. And, of course, last year at this time, people were doubting, people were calling for a recession, which, of course, didn't happen. And that's why stocks have acted so well in the last 12 to 18 months.
I guess if from the term in terms of what are some of the time-tested strategies for accumulating wealth, regardless of whatever your age is?
Yeah, I guess the best one I know is to buy high-quality companies, and that's kind of a very generic term. But if you invest in companies that have brands or that have proven management teams or have products or services that have a competitive advantage, those are great investments. And you don't have to be an expert in software, for example. You can just buy a great company with a great brand, something that that you use, and just intuitively that particular item is in demand. And so you can start there. If you've never started investing, you can start with consumer products. I always say that. What products do you use? What cars do you drive? That kind of thing. And then you can go from there. There are a lot more complicated parts of the market that are regulated. For example, there's utilities. Those are hard to understand, even in the pharmaceutical area. Those are, really, really deep, knowledge base of the medical field. So those are a little harder to get your hands around. But again, if you invest with a company that has good science and proven, management team, you can do really well even in those areas.
Talking investing with U of A MBA grad Ed Long, class of 1994. He is with, make sure I'm pronouncing this right, is it Avity?
That's correct.
Avity. It's
right.
he's a managing principal with Avity, an investment management firm located in Greenwich, Connecticut. The question I always ask or want to know is how can you? Is there a key to identifying that company early on that's going to just blow up, like an Apple or a Google or one of these tech companies like a YouTube or something where you spot it and think like Twitter blew up or something of one of those nature type companies. That how can you spot those early? Is there a key to doing that, or do you just kind of have to kind of see it when it's maybe lower level and say that might be something that eventually becomes big?
So when you say blow up, you meaning, in a bad way. Is that what you mean?
Well, blow up to where you can, if you invested early, you could make a lot of money off of it.
Oh, I see. I see. Yeah. Well, you have to look at sort of what are the secular trends. And so one of the ones right now is artificial intelligence. And so even 6 months ago, it wasn't really well understood what that means. But there are a lot of companies that are investing in that area, and that's been a great area to invest in. So, just kind of understanding the current events and what people are saying and just reading the news and listening to what some of the CEOs are saying, you can get your hands around what are the growth industries out there. Cybersecurity is another one that's been in the news. A lot of companies are getting hacked. 3 years ago we made an investment in a cybersecurity stock, and we were a little ahead of the curve, but it was already in the news and we still made a lot of money. So it's not like that we were super early. But that's a growth industry. There's a lot of threats, and so that's a great place to invest.
And from your standpoint, as you're learning this and information to pass on, like what kind of what's your process to make sure that you're on top of the game, so you can instruct your clients on what's out there and what's going on?
Sure. So we do a lot of analytical work. So we look at the industry, we look at the companies that are competing against one another, and then we go to work. We use our CFAs. We talk to management, we read the public filings, we listen to what the competitors are saying, and then we look at what the companies are doing and how they're actually executing. And it takes time to understand all that, but eventually you can see who the true winners are, and that's really where we're trying to invest our clients' money is the best of the best, and those are usually the best recipe for success is to buy the number one player in the industry. You'll make a lot of money if you can do that.
So is diversifying still one of the safer moves in investing?
Yes, you definitely want to diversify. You don't want to have all your eggs in one basket, so to speak, right? But you don't want to over-diversify. And I say this to a lot of my clients and prospects, you don't need to own 100 stocks. I mean, unless you really enjoy it, but you're going to really dumb down your returns. So academic research shows you only need about 20 to 25 stocks in a portfolio to properly diversify. And so I would suggest that, investors take a look at their portfolios and make sure they're not over diversifying rather, and being somewhat concentrated. We found over the years being somewhat focused and concentrated really produces superior results and excellent results.
You obviously have connections here to the state of Arizona. Is there anything that people should be mindful of out here about I guess hot investment properties or anything that they might be wanting to look at? Or
well, in terms of stocks, I mean, up the road in Phoenix, there's a lot of building with semiconductors, right? And semiconductors is a growing area that has some national security implications, supply chain implications, also cybersecurity, artificial intelligence, all plays into the growth of that industry. So, there's a great industry here in Arizona, and it's hiring a lot of people. And that's another sign of growth, right, is when these companies are hiring, they're hiring for a reason because they're selling products and services. So from a local standpoint, the semiconductor industry is really, where Arizona is strong and continues to lead.
So, you playing any golf courses out here while you're on vacation?
Yeah, we're gonna play up in Scottsdale with some alumni and college friends, but nothing too fancy because my game's not too good. I don't play enough. I'm at like a 20 handicap.
All right. So, are you still follow Auburn as well? Or are you primarily a U of A guy?
No, I follow both, and actually both Auburn and Arizona are in the tournament, and I'm rooting for both of them. And I think they're on the side of the bracket where they might play each other. So if they get that far, I'm going to definitely go to that game.
Well, your women's basketball team for Arizona has already knocked Auburn out, so that's a good thing there that we can hang our hat on. Well, yeah, it'd be fun for you if those two teams came together eventually down the road in this NCAA tournament. Before we let you go, Ed, in terms of, we've got tax season getting ready. What advice do you give to your investors about how to make sure they've got all their ducks in an order come tax time?
Sure. Well, from an investing standpoint, because that's where we focus on the tax implication, is make sure, you take your losses along with your gains to reduce your capital gains, and of course you have time because it's a calendar year type of thing. But, yeah, and just make sure your income is good enough where that you're not going to jump yourself into another tax bracket, for example. And you can also do that with capital gains. So you have to be a little careful, and an advisor will help you navigate that if you don't know those levels. But those are the two areas we focus on, trying to be tax efficient in both the income generation part as well as the capital gains.
Yeah, how you doing, Mr.
And quickly, any advice to kids that might be looking at the MBA program?
Busy time of year.
Yeah, it's a great program.
We do the public
faculty
affairs,
there
but
is
we also do a lot of
fantastic,
sports over
and
here at the
they really
station,
care about the students, and that was true 30 years ago, and it is true now, and I would encourage you guys to look at it. It stacks up well. I know there's a pipeline to Wall Street, for example, which didn't exist when I was there.
Of course.
So the placement's really strong, and it's on the up and up. So I'm really proud of my alumni group there, and I have high hopes that they're going to get into the top 25 someday.
Nice. Sure. Ed Long, CNBC nationally ranked top investor, U of A MBA, 94. Happy 30th anniversary, Ed.
Thank you, David. Appreciate it.